I want to talk about one of my favorite technical analysis indicators, one of the most versatile trend-finding tools out there, which includes not only the trend-finding mechanism itself, but also filtering tools like the Kumo Clouds, which helps cut out color areas. It also provides entry and exit strategies and trade management strategies at once. In general, this is an indicator which in principle, unlike many other technical analysis tools, can be used even independently, having studied only one. This indicator, you can put it on the chart and already make profit. In good values, let's talk. This indicator is called the Ichimoku Cloud. This is a Japanese indicator that was invented by Japanese investors back in the last century and has been used for quite some time. And we have a good statistical base on him, which shows that he brings good results. And so, even though it's visually challenging, many traders still use it today. As I said, that the indicator looks quite complicated, and this is the reason. It is a problem for many novice investors. As soon as you don't put clouds and flower on a chart, they see a bunch of lines, all different colors. There are some fillings somewhere. Nothing is unclear, the chart is not visible. And this discourages many people from using indicators. But in fact, if you understand it, it is quite a simple mechanism, which is built on simple market rules and on simple rules of technical analysis. So in this video, I'm going to try to quickly, simply, and understandably talk about the basic strategies for using clouds and the fundamentals. I will also show examples of trades on this indicator. So, in order to understand the indicator, I suggest that you consider it in parts. To do this, we will first remove from. The graphics are all but two base lines. To put it simply, the indicator was built on a moving average crossover, a basic principle that we, who many learn, are just beginning to dive into technical analysis. We have a fast-moving average. It's blue. It's with a period of 9. There are red, moving averages. But it's not even really sliding. Average is such a curve, which besides price changes also takes into account local minima and maxima. In its construction, it is most similar to the indicator super trend, and there is a rather complicated formula for its calculation. But to understand the simple principle, we don't need to know exactly how this formula is calculated. We just need to understand that the system is built on the cross of the moving average. When we have a fast, moving, in this case, the family crosses the red one from top to bottom. This is a signal for a trade down. And when the same fast line crosses the red line from bottom to top, it is a signal for an up trade. And even here in this section, you can see that even just these two lines from clouds and flower would give a good result if we entered just on a normal moving average crossover. But as you can see, specifically in this area, if we were to use crossing, we would have a lot of false signals, a lot of wrong signals. We have a lot of frequent chart crossovers, and that's one of the main problems with bench indicators, is that when in the market, when there is no clearly defined trend, we only have Floyd, which in the chart moves in a horizontal corridor. In this case, indicators show poor results, give a lot of false signals, and for this purpose indicators, and provides the so-called Kumo Cloud. Here we're going to add to the chart now. This is what it looks like. It's two other lines. It's also two sliding lines and one sliding line. And the second line on the same principle also takes into account the minimums of the maximums of the charts. And we're interested here too. First of all, the very fact of crossing these lines, because this is the fill of this cloud indicator, shows us the long-term trend direction. That is, the intersection of blue and red signal lines gives us a specific signal at this site. And the cloud fill shows the general overall trend direction. As you can see, it's mostly green here. That means we're in a long-term trend, a growing trend. It means that if we have a cloud of green color, it means that in this area, we consider only upward trades and ignore downward signals. Conversely, when we have a downtrend, for example, there is a slight downtrend here and the cloud is colored red. In this case, we only consider down signals on our two moving averages, major, red, blue, and ignore up signals. It is also a very important point that clouds both serve as a means to rule out a trend and to avoid making trades during cellular markets, during consolidation, As you can see, when the chart is in the cloud or constantly crosses it from top to bottom, bottom to top, it means that it is now in the market, and that specifically in this period, it is better not to make any deals. Similar to an airplane that when it goes into clouds, it experiences turbulence. Same thing when we have the chart, we have the price chart in the cloud, where in these periods, we don't make trades because the chart will fluctuate in a narrow range and we won't have opportunities to enter a long-term trend. So once again, let's solidify the rules for using the cloud. First of all, in order to enter trades, we have to have a chart either above or below the cloud. If the chart is above the cloud and it is colored green, it means that we are only considering up trades for the main strategy. And if we have the Kumo clouds in red and the chart is below it, we only consider down trades. This is such an indicator, which simultaneously indicates to us what long-term trend we have and in which direction we should consider trades, and also helps to avoid everyday moments when we do not need to enter trades at all. Now let's combine the two, both strategies. It is worth noting that there are indicators in the clouds. There is also another line, which is longer term, which serves for some additional strategies or for finding exits from a strategy. But in order not to burden this video information, we will only use two sets of signals: base crossing signals, moving lines, and cloud signals. So here we have added to the chart. Now in order to look for a deal, we need the simultaneous fulfillment of those conditions already listed. First, the chart must be either above or below the cloud. In this case, lead the chart above the cloud, we have the cloud begins to color green. This confirms that we are only looking for an upward signal. And then on this plot, we need to look for moments where the blue line crossed the red line from bottom to top. Here we see a signal like this, and we have a match of all the components we need. We have a baseline crossover where the blue line crossed the red line from bottom to top. We have a green-colored cloud, and we have a graph above the cloud. In this case, we open the trade upwards and close the trade when the slides cross in the opposite direction. In this case, right here. Or if the cloud changes its color to the opposite color. Here's another good deal. We have the graph above the cloud. We're starting to turn green right here. And here we see the blue line cross the red line from bottom to top. Here we open a trade and make a profit. That's up to this point, where we have a reverse crossover, but immediately we have a new signal. Again, the blue line crosses the red line from bottom to top. Again, all conditions are met, that the chart is above the clouds and the clouds are green. And this is where we can make another trade up until the next intersection, that is, until this moment. That is, we would have two positive deals on this site. Let's look at examples to the contrary. So to use an example where we have a trade down, let's take it away again so we don't get misled. So let's take a look at this plot here. Here we have a chart that has already moved under the clouds. The clouds were painted red, so now we are waiting for a reverse signal for us blue line to cross the red line from top to bottom. And this is happening right here. At this point, you see the blue line has crossed us over the red line from top to bottom. And here we can open a trade down and make a nice profit on the strategy. A few important tips for using clouds. First off, I suggest using them differently than they are plotted on the chart, because in trading they are generally pretty thin lines, and you can't see them. I advise you, when you insist, indicator, put the lines thicker. And that will allow you to better see what's happening on the chart, and better see the chart signals. As you can see, if you light up these lines, make them thicker, you can see the signals better, you can see the crossover better, and the cloud is highlighted better, also more clearly highlighted. Secondly, there is the usual rule that the higher the time frame, the more reliable the signals will be, and the larger deals you will make, but the signals will appear less frequently, because here each candle appears once at 4 a.m. If we used a 15-minute frame, each candle would appear once every 15 minutes, and the strategy signals would appear more often. Also, like I said, new indicator, and it doesn't work well in flat. And even though the noise cloud helps us avoid it, it's still better to pick assets that move more often in a trend than in a fleet. These are manager-class currency pairs, are cryptocurrencies, and these are oil, commodities, and other assets that often move flat, such as bonds. I'd avoid it. And as you can see, the cloud is not as complicated an indicator as it seems at first glance. Here it's all built on a regular sliding crossing. If you learn to interpret cloud and noise signals correctly, you can make deals with an 80% probability of profit. This is a very good indicator, and I suggest you try your trading.